Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, everyone. How are you going? Thanks for joining us on the podcast today. And we're in the middle of doing a whole series, which we love to do, of investor stories, people navigating COVID-19 and, life after COVID-19 and everything COVID-19. But it's a lot more than that. COVID-19 is just shaping the market we're currently in right now. Obviously, fundamentals that drive property in Australia has been reasonably consistent since the first fleet sort of landed here in Circular Quay and started doing what they're doing and people started getting in property. So it's not a bad asset class. There's a lot of Australians doing invest in property. 8%, I think, of everyone that lodges a tax return has some sort of claiming of an investment property on it. So it is accessible and available to most Australians if they are driven that way. But when you start looking at the numbers of properties that people hold, you get up to sort of 5 and 6, and it's a very small percentage of Australians actually have multiple properties as part of a property portfolio. But it is an aspirational investment for many Australians, just getting on the property ladder to own a home to live in and hopefully and maybe raise a family in, where others are out after building wealth through property and property investing. So we have all those chats with people right across Australia, and this COVID-19 thing's given us greater capacity to be able to speak with people from right across the nation. We're not now bound by just doing it in our studio. I've always liked recording in our studio because I found that you just get a much better quality chat. But under COVID lockdown, we started doing a lot more via Zoom, and it's working pretty well. So we'll continue to do that. Now, today, our investor story is in the Gold Coast, the sunny Gold Coast, now on the same time zone, I think, as the rest of the world. I've seen that you don't like daylight savings. Caleb Gray. Caleb, how you going, mate? You well?
Not too bad, thank you, Phil.
What time is it there?
It's the same time. I don't know. Don't get me started on that. Doesn't make too much sense. But
It's pretty mad. How are you getting on up there? Are you sort of in lockdown at the moment? You're working from home? What's going on?
Yeah, working from home at the moment. It's been probably not too bad if you're on the Gold Coast. Surf's been all right, so taking full advantage of that in the morning before work, it's good. And I'm sure there's a lot of other people doing the same because it's always packed at the moment.
Well, they reckon everyone I sort of speak to that gets in the water is annoyed because the lineup is a lot busier now that everyone's working from home. If it's good, people seem to find excuses to be down at the beach. And even when it's not between 9 and lunchtime, it seems to be a lot more crowded. So something's not happening. I think this whole work from home lark is good for surfers. There's easy to make an excuse to go and get wet. So, that's cool. So what's going on, Kay? So you've been listening to the Smart Property Investment Show for a little while. How'd you find the podcast originally?
Yeah. I guess this is probably where my interest in property started. So thank you for running a podcast like this and making it so accessible. It probably started, I was in my graduate years driving an hour to work every day up the freeway back in Melbourne and just wanted to make use of that time. So what I started to do is listen to podcasts like yours and the Property Couch and just smash that out. I loved it. I love being in the car and listening to it. I just developed that passion from there for property.
So you've been in the car, bored, batless, sort of listening to me nagging on about stuff with different investors. What sort of stuff do you like the most? Do you like the investor stories, or you prefer it's a sort of a bit of a vox pop? Do you prefer the sort of experts coming in and telling us what's going on?
Yeah, I definitely like listening to the experts and educating myself through them. Even now, still doing that. But also like the investor stories, because there's no one way to property invest. There's so many different avenues and everyone's got different backgrounds. So it's good to hear how people have gone about property investing.
So just give me some sense to help shape this chat. How many properties do you have now in your portfolio?
I only got the one. So I only got the one, my own occupied, that I'm in at the moment. We're currently renovating that. And the idea will be at the end of the year to pull some equity out and go again.
Okay. And you mentioned we're currently renovating that. Who's the where?
My partner and our little French bulldog.
Okay. There you go. So you're a pretty young guy. How old are you?
23.
Okay. All right. So you're pretty new to investing. So you've gone down a path of buying a principal place of residence first and then renovating it, living in it. Are you going to sort of you going to sell it and buy an investment property, or is the idea is to trade up into something else or use the equity in what you've created now to get you into the next property?
No, I'm definitely a buy and hold investor. I don't want to get rid of anything. So we're just going to take the equity out of this, rent this out, and then probably move into another one and do that up. Or my options are still open at the moment. Reinvesting could definitely play its part there.
Okay. And so what do you do for a living, Caleb?
So I'm a commercial building surveyor.
Okay. Which means what for those people that don't know what a commercial building surveyor is?
No. So basically I issue building approvals for large buildings, residential towers, shopping centres, warehouses. So being in the spotlight the last couple of years with all the combustible cladding and issues like that, which has been fun. What
sort of university degree do you got to do to do that?
So there's different levels you can get in. There's different types of building surveys. If you only wanted to work on, say, houses and sheds, you only need to go to TAFE. And then as you get up into that bigger stuff, you have to go to uni, and it's just a Bachelor of Building Surveying.
Okay. And did they teach about sort of don't put dodgy cladding on buildings? It's bad for everyone. Was that part of the syllabus or your coursework?
It was somewhere deep in the textbook.
Do you enjoy it? Are you happy? So how long have you been doing that for a living now?
Been doing that since I was 19, so 4 years now.
Okay. And you happy with the career choice? Is good?
Yeah. So I definitely enjoy it. It's interesting. It keeps you on your toes, and there's always something new. You've kind of got to be across all aspects of building. You work closely with engineers, so you know a little bit of everything, and there's always more to learn. Yeah, it's definitely interesting, but I think my passion lies in property, and there'll definitely be a transition to that in the future.
And do you think you'll use the apprenticeship and the work you're doing now as a commercial building surveyor, you're going to help shape the way you invest as a property investor?
Yeah, definitely. I think we work a lot with the big guys in the office. So your land leases and your MERVACs and that. So, and what I found is that I'm actually interested in where they're building and where they're putting their money. I find that probably the most interesting aspect of the job. So that's definitely shaped how I look at property investing.
And it's a good point. So, those large developers where they choose to spend their money and buy up land and put whatever they want to put onto it. But they're pretty strategic about that sort of stuff, aren't they?
Yeah, it's pretty full on. It's not as simple as just buy something and wait 30 years. There's definitely a lot smarter people than me working in the background, strategically thinking about 30, 40, 50 years time and what it will look like. So, yeah, I find that really interesting.
Yeah, it is. And it just goes to show that property is a long-term game. If you're thinking 30, 40, 50 years out and building shopping centres and town centres, and, it is a very complex and complicated and a very sophisticated process to get right. And those large developers, by and large do get it right. There's other developers less so. But let's have a chat, Caleb. So you're on the Gold Coast. Are you originally from the Goldie?
No, so I grew up on the Mornington Peninsula in Victoria, another nice place in the world.
And so what sort of got you to the Gold Coast?
Yeah, so I took an opportunity with work up here on the Gold Coast. I always wanted to move to the Gold Coast and be in the water as much as I can. And that opportunity presented itself and I jumped straight at it. I think I had the interview and then I was up here a couple of weeks later, just completely changed and jumped into it. It's probably at the time not the smartest financial decision, purely from financially perspective. I was living at home with my parents still and was saving quite rapidly. I was on my way to my first deposit. And I think if I stayed there, I definitely could have kept churning away at properties, but I knew I'd probably regret it if I didn't take this opportunity to go up there and enjoy myself up on the Gold Coast and be in the water.
How long have you been there for now, Gold Coast?
Been here 3 years.
Okay, yeah. 3 years. And so when you arrived, so you packed up your car and drove up there. Did work put you up for a little while somewhere, or did you have to find a rental or straight away?
No, so I actually Airbnb'd, found a few different spots where I wanted to be short term, just around the coast to see where I liked. And then I worked out with one of the hosts to stay there a bit longer, just as something different, not in a normal rental. So it was good. It was really good. I really enjoyed that. But then I guess once I got settled, then it was, time to look for a property.
And you've been saving up money this whole time. You arrive on the Gold Coast with view to buy property. Did you set yourself a particular time frame to acquire a property? Or was it sort of I'll keep saving and see if something comes up?
It's kind of just going with taking the Gold Coast spirit and just going with the flow for a bit there. I think I definitely is harder to save when you're out at home and you're not with parents. I think most people can agree with that. When you're out renting, it's definitely harder to save and you've got to be a bit more stricter on your budget. So I'd done probably 80% of the heavy lifting with mum and dad back home, and then just saving that last probably 20% of my deposit while I was on the Gold Coast was probably, what I was doing.
And you said you Airbnb'd for a little while and checked out some different places. Then did you do a long-term rental somewhere before you actually went and bought a place?
No. So I ended up working, paid some cash to the Airbnb host and just stayed there, and they were really lovely. So that went on for a little bit while I was saving. But that's what I ended up doing.
And how'd you go with saving? I know the Gold Coast can be expensive if you're like hanging around Cavill Avenue and drinking fancy drinks. Did you live like a peasant eating Maggi noodles and baked beans, or did you sort of get out there and have a bit of fun as well?
No, I definitely didn't live like a peasant. But at the same time, I wasn't going overboard. You won't catch me up in surfers. I definitely don't hang around there. But I still went overseas and did the fun things and got myself settled. Yeah, I definitely wasn't living like a peasant, that's for sure.
Well, it's good. You've got to mix it up, and you're still young, so you don't want to be pinned down too much financially. You got to get out there and do what you need to do. When we come back from a break, I want to have a chat about the property that you purchased and what the future is going to look like. We'll be back in a moment.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with Caleb Gray, investor on the Gold Coast. I guess, are you an investor or you just bought a home that you're going to turn into an investment? Do you sort of consider yourself a property investor, even though you live in your principal place of residence?
Yeah, at the moment, I wouldn't call myself a property investor. I have the mindset of a property investor, but I don't have one. I've only got my principal place of residence at the moment, but by the end of the year, we'll turn that into investment property, and that's definitely what I plan to identify as in the future.
So tell us about the property you purchased. Where is it? What is it? How much you pay for it?
Yep. So it's in a block of 4, a unit in a block of 4 near Tallabudgera Creek. If anyone knows where that is, I'm about 200 metres walking distance to the creek and probably 300 to the beach. So it's a nice little spot there. I actually came about it, interestingly, I was trying to put together a deal for another unit just up the road, and I was looking for comparables to try and get the price down on this one. And I was looking through it and it came up in Domain, and not too many people up here in Queensland I found use Domain. It's kind of just slid under the radar. I think you can advertise for free on there, and I just stumbled across this one. I was like, I'll use this. It's heaps cheaper. I'll barter it against him, try and bring him down. And the more I looked into it, I actually liked this property a lot more. And it was about 50 grand less. So I ended up going with this one. And I'm pretty happy with it at the moment.
What'd you pay for it?
So I bought it for $333. And I could not find anything that under $350 that was off the highway. Okay. So I think I did pretty well. I reckon it was easily $340. Yeah, so $333 for it at the moment. I've put a bit of work into it now, along with some friends. I'm definitely not good on the tools myself. I'm terrible. I reckon I put in about $15K, and conservatively, I think it would come in around $400 at least.
So what sort of work have you done?
So general stuff. So new carpet, new paint throughout the place, painted all the new kitchen cabinetry, kept the bench tops. We ripped out the whole bathroom because there was some water damage in there, and pretty much had to do some work on the framing, and that's a brand new bathroom in there. And we've just got now some minor touch-ups in the floors, and we'll be good to go. Yeah.
How did you, and over what period did you do that work on the renos?
So I've just been doing it bit by bit over the time I've been here. I think like most people, when they jump into their first home, they don't have a huge wad of cash sitting there to jump in and spend it on a reno. So just when I've had the money, bit by bit, just worked around and looking forward to finishing it, that's for sure.
How did you work out like budgets for each, bit that you've renovated? Did you sort of go, I reckon I can make this house worth $400K, so what do I need to do in order to do that? Spend 15 from 333 is probably not a bad result, but were you really strategic about that, or you just went, I'll do the bathroom, I'll do the kitchen, I'll start at it and work out what I'm going to do and just gut the Bunnings and get some paint and that sort of thing?
Yeah, it wasn't super strategic. I knew looking at other properties around what I was going to get roughly. And I thought if I spend around 15 grand, then I'm going to get a good return on that. And it was pretty much that. I knew that I probably budgeted myself 10, knowing that it would blow out, and it did a little bit. So I'm glad I just allowed that buffer for little things along the way, like the water leakage.
How much of a headache was it, sort of doing it bit by bit? Did your partner and your dog sort of start complaining when the sort of plumbing didn't work and all that sort of stuff?
No, it wasn't that bad.
No.
The bathroom got done pretty quickly. Got in and smashed that. The other bits have been all cosmetic, so can't really complain about that. It's been good.
And what, you just sort of got your mates in to help you do sort of bits and bobs, or did you have to actually get some tradies in to do some of the work?
No, so I think most people can relate. They know someone who knows someone who's a tradie and who can do the work. So I think that's probably a big thing if you're doing renovations and looking to capitalize on that. If you know someone and they can do you a good deal and, they do good work, and, if you can pay them cash, all the better, I think. Ideally, if you can do it all yourself, you're going to save a lot of money, but most people can't, and you're better off doing it properly and getting someone who knows what they're doing. What
bits did you do yourself? Painting, that sort of thing?
Yeah, just the painting and just some small minor work of trimming down some of the stuff in the kitchen and that. Nothing major, that's for sure.
And are you done with the reno now? Are you sort of happy, or you still got work in progress?
Probably another month. Just the floors will be the last thing, and then chuck on some new blinds and should be good to go.
That's cool. And, now that you're sort of most of the way through the project, anything you do differently? If you had your time again renovating, would have you done it faster and more intensely, or you're quite happy with the outcome?
I think I would have done it faster and more intensely and enjoyed it while I'm in here, because we're going to be leaving soon and someone else is going to get to enjoy it. Would have done it straight away, but it is what it is, and you've got to deal with the hand you dealt. I'd rather do it this way than take out a loan and be paying interest on it. That's for sure.
So this is your first. So I want to get into what the plan is moving forward. And you mentioned you draw some equity out of it to go into the next one and keep this thing as an investment property. How did you go as a first home buyer? Did you find that process easy enough? I know every state's got different legislation and support for first home buyers. And first home buyers are really quiet for a while. They've bounced back quite a lot, and it's good to get young Aussies or all Aussies into a house. Did you use any of the sort of home loan deposit schemes, or any other sort of stamp duty concessions that you got?
Yeah, so I was probably just in before all this sort of kicked off. The first home loan deposit scheme, which came out earlier this year, I was just before that. I basically just used the first home buyer concession, which they had in Queensland. So no stamp duty or land transfer tax. So that definitely helps. That's pretty big. It's a pretty good time to be a first home buyer. There's definitely lots of helping hands from the government at the moment. But that's all I got to utilise. I think for new builds, they give a $15,000 grant, but this was existing, obviously.
So what sort of loan did you get? Was it P&I interest only? What sort of deposit did you put down in order to secure the place?
Yeah, so it was just P&I basically, because I was putting in, I think I was only 5% deposit, so beggars can't be choosers. There wasn't too much to go around, but they're definitely happy to lend to you at 5% deposit. Yeah, it was just P&I.
Yeah. And any help from the parents? Do they have to guarantee or anything, or you be able to do it yourself? You must have had to pay some lender's mortgage insurance, LMI.
Yeah, that's right. Yeah, I did pay LMI, but that got slotted in the loan. I think that's what a lot of people worry about. It's like, I've got to pay this large chunk of LMI for no reason. But the way I see it is you're getting in. I mean, it's quite minor in compared to the property. I mean, it can get chucked in the loan. So I'd just rather get in now before prices start to take off, and whatever it is, 8 grand, 10 grand gets made to look pretty small in the scheme of things.
So what you're talking about there is the term is capitalising LMI. So you just add it to the size of the mortgage. So was that 95% inclusive of LMI or exclusive of LMI?
That was inclusive. Yeah.
Inclusive LMI. Okay. So you've got in there, you just saved as much as you possibly could to get into a property. And from what you said, you feel as though you've purchased pretty well. Would you? 5% is not a lot. The bank owns 95% of your property by and large. So, it's okay if you've got a nice, safe, secure job and you don't want to do anything too quickly on it. What's the plan moving forward? You're going to refinance and do this sort of stuff. Is the lender you think you're with happy to lend you more money?
I think so. I've seen a lot of stuff recently that banks are almost begging to lend money if you're the right person. I saw something from ANZ about going back to 100% loan, whether or not that was depending on who it was for. But I think, I'll be good to go. I've got a nice stable job that's seen through COVID, which is good. But definitely it will be good to go. Depending on how much equity I can pull out, maybe I have to chip in a little bit more as a deposit. But we'll be pretty keen to go forward, but I'll leave that up to my mortgage broker. He can wheel and deal.
Well, let's chat about what's next for Caleb, but we'll go to a break beforehand. Back in a moment.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit dashdot.com.au/SPI.
Welcome back, everyone. Phil Tarrant here, host of the Smart Property Investment Show with Caleb Gray, young property investor up on the Gold Coast looking to shift in his next property. So how much money have you saved up in between, doing your renovations? Have you blown all your dough on fixing up the place you've got, or are you still got some readies in the bank ready to support the next deposit?
Definitely I've kept my buffer at the moment just to be safe, but a lot of that money's gone into the reno and just making sure that, when you're young, making sure you can pay off the home loan and stay comfortable. But we'll look, once I'm able to withdraw that equity, we'll definitely lock down, and whatever the difference is, I'll make that up to secure another home.
Just to give some sense to our listeners who are younger sort of investors, or maybe like yourself looking to buy their first home, can you give some sense of how big your mortgage repayments are versus your monthly salary?
Yeah. So at the moment, and this was probably the reason that I decided to buy. I mean, I always wanted to buy, but what made it so clear to even buy on the Gold Coast was that I looked at what it would cost to rent in something I wanted to live in and what it would cost to buy. I think my mortgage repayments at the moment are $350. I'm like, that is just ridiculous. It's really cheap. You're not renting anything for under $450, and it's probably not as nice as what I'm in. So that was a no-brainer.
So $350 a week is your mortgage repayments, principal and interest, and to rent your place right now. So when you do turn an investment property, $450.
Yeah. I've had an agent over, and they've said $500. So we'll add a buffer there. Also, $475 is probably very conservative.
So it's a really good point you make. So it is actually cheaper for you in the current interest rate environment to own a property and add value to it, and for it to grow in value over time versus paying money on rent. And you're not really compromising anything anyway, right? Because that's money in your back pocket that you'd have to be spending on rent anyway. Do your sort of mates sort of understand? Have you sort of share what you're doing with friends and your sort of immediate age group? Do they understand what you're doing?
They do. I don't advertise it and blast it out and get into their face, but I definitely, if my friend accidentally says the P word property, I get a piece of paper, get a pen, come on, let's go sit down for an hour and talk.
Yeah.
Yeah, I think now they're starting to realise that, especially here in this environment on the Gold Coast especially, it's very cheap to own a property if you can get that. And probably the hardest part for most property investors is that first deposit, getting that, saving for that. And then once you're in, you're sailing. And I think, there's other ways you can look at it. You can get a mate in to help cover the cost of the mortgage as well. So, yeah.
Yeah. So how much did you have to stump up? What was your initial deposit to get going at 5% with capitalising LMI? What was your total cash outlay, like with all the concessions and stuff you got?
Yeah, I think I tipped in 30.
Okay.
I had about 30 saved.
Yeah.
And that got me in.
What do your parents reckon about you getting going and buying property? Are they pretty happy?
Yeah, they're pretty happy. They trust me, which is good. I think they come from that older generation of debt is bad, just have your house paid off. I don't think they came from the same page where I want more debt because I know it's going to make me more money, but they definitely support me, that's for sure.
So if you were to sort of go, stuff this, I want to go overseas traveling for 2 years, and you rented your property out, do you think it'd be neutrally geared?
No, it'd be positively geared. Yeah, definitely. Yeah, quite easily. I think that's also a good thing when you're investing positively geared properties. When you're younger, you've still got that flexibility. I know for sure most people my age still don't really know what they're doing in life or what they want to do with their life, what they want to do for a career. So I think if you're able to invest in something that puts money back in your pocket, it does give you that flexibility. You're not locked into your job. If you want to go overseas and you got the money to, you can afford to do that. Or if you want to change careers, and it might mean taking a little bit less, a little bit more of a pay cut to do so, you still can. I think that's a really powerful thing of investing positively geared properties.
Yeah, it's good counsel. And, a lot of people your age, Caleb, they complain about property being unaffordable and it's impossible to get on the property ladder in Australia and there's all these reasons why they can't. I think you're a testament to say, well, that's a lot of BS, right?
Yeah, no, I definitely, I think it's, and I think a lot of young investors don't know how close it is. I think most people think that you've got to stump up that 20% deposit, which can be a lot of money if you're in a capital city, definitely. I think a lot of people don't know that you've got the first home loan deposit scheme now where you only need 5% deposit and the government will cover your LMI. There's low interest rates, which makes it great to get in. You've got your concessions. If it's a new home, you get a grant in most states. I think it's a really good time to invest if you're a first home buyer. Yeah, you've been complaining because the market's been hot. Feels like forever. And the whole time I've been looking at property, I feel like it's been hot. And I think now that, there's some uncertainty around the space with coronavirus, if you're fortunate enough to be in a position with a stable job, then it's definitely a good time to look at buying, that's for sure.
Yeah. And for you then, gearing up for your next purchase, so you're going to refinance this current property and then you're going to rent it out and then go and buy another property that you're going to do another reno on. Is that the idea? Is that what's shaping your investment decision?
Yeah, I think so. I think I'll still be think that I'm not earning real money in a sense that I'm definitely still young and I'm not earning 150, 200 grand a year. So I'm definitely still going to play on that lower end and go for another cash flow property that sort of gives me that flexibility to do what I want. It doesn't lock me down. But that's definitely for sure. Refinance, take that equity out and then go again and try and manufacture my own equity on the next property.
And what would you be comfortable refinancing this current property at? Would you sort of 90% or would you go back to 95? I don't know if the lender will let you do that, but what's your plans?
Oh, as high as they go.
Yeah, as much as possible.
Yeah,
the thing is, though, is if you get it wrong, well, number one, you're buying inverted commas cash flow positive property. So if you get it wrong, you should be able to hold on to them. But, worst case scenario, if everything goes absolutely wrong for you, you're only 23 years old, you can start again, right? You're not going to get yourself hopefully in too much problem.
Yeah, that's right. Yeah, I don't plan on tripping up that much, but I've still got time on my side. And I think that's the positive of getting in there and manufacturing equity through renovation. If worse came to worse and something happened, I lost my job or whatnot, you've got this property that has been touched up and is in better shape than what you bought it in. Chances are is you're not going to sell it for a loss. You're going to make something, if not break even. So it's almost a risk management kind of strategy there as well.
Yeah. Do you know what you're going to buy? You're going to buy just around the corner, or you're going to buy in the Goldie, or you're going to, I guess you want to live up there and you're stuck there for work. You're just going to try and find another 2-bedroom apartment similar to what you got?
No, I don't think so. I'm going to try and diversify a little bit. I might look a bit regional where it's a bit cheaper and in a good, strong economy, tossing up still between Queensland and Victoria, just because I'm more familiar with those areas. But we'll definitely try and diversify. We'll go a house that I can toy with the landscaping and backyard a little bit more. You're kind of restricted with a unit. Quite lucky myself that there's only 4 of us and everyone's really nice and gets along, and we can touch up the fence here and there and try and make it, give it a bit of street appeal, but definitely want to control more factors, that's for sure.
And how long have you been with your partner for? Is that before or after you purchased this property? Can't remember. It's a tough question to ask. Be careful.
She kind of gave me the nudge to get our own space. So.
Okay. All right. That's good.
Yeah.
So, you're obviously keen about property. How's she sort of feel of it all? She just wants to not worry about all that hullabaloo and enjoy the good life as a young 20-something on the Gold Coast?
Nah, she's pretty switched on. She's very switched on. Definitely is probably a bit sick of me talking about property, and she's definitely, I've definitely wrapped her up in the whole property bug thing. She was talking about buying a new car recently, and I was like, that's like close to a house deposit. Maybe you should buy it on that. She said, no, I need 20%. I was like, no. We can go and buy a house. Look at this. The car will depreciate over time. It'll be worth $1,000 in 10 years' time, and this property will hopefully have doubled.
Yeah.
So she's on board now, and she'll be looking to buy her own pretty shortly. So exciting.
Cool. No, nice one. Well, all the best of luck, Caleb. Thanks for sharing your story. It's good to see young investors out there giving it a red hot go and dispelling some of these myths that it's impossible for young people in Australia to get into property. You pick up any paper from the 40s and the 50s and they'll still tell the same stories of how unaffordable property is for young Australians. So, just get in there. And I think you're testament to the fact that you can actually get this done. Some compromise and some sacrifice there and maybe a bit of pain saving for your first deposit. But once you get going and if you buy well, the pathway that you're on where you're trying to manufacture equity, cool, and buying smartly to try and propel yourself in this acquisition phase into the next property is not a bad little strategy. So keep up the good work, mate.
No, thanks, Phil.
Let's get you back in once you get that next property as well. You can tell us all about it and that's cool. But thanks for your time today, Caleb. Appreciate it.
No, thank you.
Remember to check out smartpropertyinvestment.com.au if you're not yet subscribing to our daily morning newsletter. So the first to know what's going on in property right across Australia, smartpropertyinvestment.com.au/subscribe. Social media, just search Smart Property HQ. That's for headquarters. You can keep abreast of everything we're up to. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.